Hey, Mike here. I need to do a video for you because I think we're at a really good buy point for gold, silver, and mining stocks. And mining stocks are something that I talked a lot about last year, a lot about in December, a lot about in January, but not much at all in February. I kind of just was silent on them as far as videos go and stuff I put on the free area of my website. Didn't stop talking about them though in the Power Investor private group. But what I told them was back towards the end of January to not buy and to wait for a pullback before you buy. And that's why I kind of just stopped talking about them that much in the free public world out there, because I just didn't think it was that time to buy. But now I do. Let me explain why I think that, how to buy dips, identify buy points, not just in gold, but the U.S. stock market too. As you probably know, I use something called stage analysis to determine the overall trend any individual financial market, asset class, or sector is in, and to figure out how to deal with it, what the right way to position yourself is, because that changes depending on what stage the market is at. And this is a site with a page on it I just found. I just want to real briefly explain what stage analysis is. There's errors on this website, though, that a few mistakes, so I don't really want to refer you directly to it. They say it was invented by Stan Weinstein, who wrote the book Secrets for Profiting in Bull and Bear Markets, a book that had a huge impact on me, a book I can recommend you to read. However, it's not really correct to say that he created this idea of stage analysis. It was created in the 50s or 60s, as far back as I can tell, by another author who popularized it back then, and Weinstein took those ideas. It's not to take anything away from Weinstein at all, because the truth is it's universal, proven, and investment principles that work and that we both want to use that make money. You know, that there's reasons principles become principles, or tactics become principles. But anyway, stage analysis. Stage 1, things are going sideways. Stage 2, you're in a bull market. Stage 3, topping market. Stage 4, bear market. And this has an example of this, comparing it to the 30-week moving average, basically the 150-day moving average. It says some examples of what you see in stage 1 and so forth, and they have advice on how to play each stage. The important thing is, you know, if you're if you're bullish on a market or looking to buy in a market, the best time to do that is on dips. So, for example, here's the NASDAQ, all right? And I use the daily stochastics to identify overbought and oversold conditions. It's go to Google and type in stochastics, and you can get the whole mathematical formula of why it works, and learn that for yourself. I'm not going to, for time, not going to go into all that. The key is that it's looking at the price movements of the stock or market you're looking at compared to what it's been doing, to identify oversold conditions, or when both the stochastics are below 20. That makes for buying opportunities in markets that you want to participate in. Or in the above 80 area, that means you're overbought. You should just wait. Well, the NASDAQ is now overbought, so is the Dow and the S&P 500. So whether you're bullish on it or bearish or whatever your opinion on the U.S. stock market is, this suggests at the very least that you should wait for a pullback before you buy. Okay, wait till the stochastics get below 20 again. You can see how that would have been a great buy opportunity in December, in October, in August, in April, in February, in October of 2013, and on and on and on. If you just waited for this as a time to buy, as opposed to buying when things go up and everyone's going crazy with excitement, that's how you get good positions in a bull market. And this is exactly why I told people in my private group, this is the HUI gold stock index back here in January to wait. Don't buy. Wait for the pullback, because the pullbacks happened, and wait. And that's what I said. And I said I'm not putting out any more picks when it comes to mining stocks. No more recommendations till I think we've had a dip and it's time to buy. That time has now come. As you can see, the daily stochastics are below 20. So what we saw last November was a crash in gold stocks, which I believe marks the end of a bear market that started way back in 2011. We saw a rally of 40% from that low in the HUI up to the long-term 150 and 200-day moving averages. And now I think we're just having a simple pause below these moving averages, which means now is the time to buy. Now, and that's why I've released 10 picks this week, and you can get them. I'm opening up the Power Investor Service for the next 24 or so hours, or until 10 o'clock Thursday, for you to join the Power Investor Service just to get this report, if you're interested in that, or get everything else in the service too. But I'm opening up so because I put this report out, and it's got my top 10 mining stocks to buy. So what I think, a lot of people are saying, oh no, they're going to crash. How can you be buying? How can you be buying? Because I buy in multiple asset classes, but more importantly, I think the picture in mining stocks is really fascinating right now, because it looks to me like what we're seeing is a natural pullback and pause. And if we consolidate here, we're just going to bust through the long-term moving averages, and that will complete the transition into a new bull market. And I think that's going to happen because the relative strength of HUI divided by gold ratio, which compares how the mining stocks are doing compared to gold, is very strong right now. And this is important because that ratio tends to lead the action in both. So when you get a dip in the mining stocks, and the mining stocks are performing better than gold, which is what's been happening, that usually signals that the situation is bullish, that once this dip is over with, you're just going to take off and see the mining stocks continue to lead higher. And that means that this is the time to take positions. And what I did over the weekend is I looked through all the mining stocks, looked at the valuations, looked at fundamentals, looked at their chart patterns, to pick out which of the 10 best mining stocks are going to have the best chance to lead the entire sector for the rest of this year. And these are stocks that I don't think of as short-term trades. These are not momentum plays. I know a couple of weeks ago I recommended or put out several momentum plays just to play the U.S. stock market momentum, and they, as a group, did fantastic. However, this is different. Those were short-term plays. I would, if you bought any of them, sell them now, frankly, and take the profits. This is different. These are not for buying for a week or 2 weeks or some fast money trade. These are to hold for the whole year and beyond, frankly. So I'm real excited to be able to put together a list like this. Been waiting to do it for over a month now, about almost 2 months, and now's the time. So take advantage of this offer to join the Power Investor Service. Click below and do that, and become a full member, get the report, everything else going forward, and I'll be talking with you later.